Hello traders, this is a DAX recap video for Wednesday, April the 20th. I am now with one of the before charts with the futures zones chart. Just a reminder what we had at 822, the range and the market that was backing away from our first better resistance zone and also from yesterday high right at 8 a.m. That final hour of the pre-market session can be very important for us, and today that final hour was leading the price toward the gap fill, and the initial idea for today was that can price be rejected from this range to make an early gap and to move higher, and to stay open for both scenarios, one being the first one, the higher odd one, which would be gap fill and up toward the main resistance and maybe even higher, and the second one would be being accepted inside the range. And the bigger picture is the one which is responsible for the odds, and odds were favoring the up move, as I was telling you in the previous power recap video, how it all comes together when we are watching other markets and how S&P was holding the halfback and pushing above daily 50, how Nasdaq was holding 61.8 and so on, and how DAX, which is the most important thing, was holding in the 38.2. Here, where we have only tails of these daily candles, and maybe even better to look at that on futures, see this area here. Here we have only tails, basically, below the large time frame reference 14,080, and we had that 14,917 gap which was filled, and 38.2 was holding. And as was said yesterday, this could be an accumulation and a prep for a move higher. So it all came together, and today we had a directional move on DAX. And not only that, DAX yesterday closed with a slightly negative value, while S&P and Nasdaq had big up days. And that's also a part of a seasonality. Seasonality is not going to work every single time like everything else. But we know that there are several stocks, the big 8 on Nasdaq, and the tech sector is the biggest sector in the S&P. So whatever happens with those big 8, those big 8 are going to move the market. What are those big 8? Those are this Facebook, Amazon, Apple, Netflix, Google, Microsoft, Nvidia, and Tesla. They are the ones that are pushing the market, and they are the ones that can push S&P, and then S&P can also help in pushing DAX. Yesterday the move was in the US RTH session, and that's why I wrote in the morning notes today it is important for DAX to be able to move on its own, for us to have that early push higher. So today we had it, and I just want to go quickly through the small time frames chart and to quickly discuss what we need to see to turn from buyers to sellers, and what kind of setup we need to get for that second variation of being accepted inside the range. The gap fill trade on its own is pretty easy. You place your resting order in the vicinity of a gap and you wait for market to fill it. Everything was pointing to that idea that's going to be likely, that market is likely going to fill the gap. It was pretty near it, and we got the move down from first better resistance zone. Also, if we make a fib, which in this case is, like other cases, is just a helping tool. You are using fib to see, do you have a confluence with other more important references. In technical analysis, there is a hierarchy, very clear hierarchy. Horizontal lines, meaning support levels, support and resistance zones, lines like cash close, opening level, pre-market high, pre-market low, yesterday high, yesterday low. comes first. Those horizontal references are coming first. Then we are using fibs, then we are using trend lines, channels, and so on. But if you have, for example, from yesterday low to yesterday high, right at the gap fill you have 38.2. Guess what? That's the first then conservative pullback. So you have here few reasons why to take that long, and that's good enough of a reason to keep a resting order there. After all, what is the worst possible scenario there? To get a -1R. And then we could get a move to the top end of the range, stalling, then rolling down. And that would be a short with the idea of being acceptance into the range and with the idea of targeting S1. And if there is sufficient downside momentum and then basically a failure, then all of this would be just a false break, then even to seek a move toward the S2. Though that would be that second variation. But we got the very fast move higher from the gap fill, and that was a good long. Then what comes next into the play? Directional conviction and judgment what to do with such a trade. Are you going to take a quick trade using the initial momentum and closing below this resistance zone, or you are going to be more patient, do nothing much on a trade management, meaning not to micromanage and to move stop too much, just leave it where it is, maybe to cut it down a bit, and then just to leave it, to watch how your plus 75, plus 80 points goes down to 25, 30 points, but knowing that if they are holding, and if they are holding the upper end of a range, it could go toward the main resistance and even higher, because main resistance was the first better target, and that target alone is 150 and more points. So for patient traders, there was a chance with a wide stop to land a 3R trade. And believe me when I say this, in day trading, every plus 3R trade, like a sole trade, not 3 times 1R, but 3R in a single trade, that's always a very, very big catch for a day trader. So about all of this, let's go now on a CFD chart. Let's go down on a 5 minute and just discuss this price action quickly. So we could observe this bigger range. We could also observe this one here, a smaller one, and how price was being rejected from our first better resistance zone where yesterday high was, and then this line which we have in every single morning notes. It is not there just to fill the space. These levels are very important: pre-market low, high, and opening level. Opening level, which is basically a 9 a.m. line on CFDs and futures, can be very, very important, because here, this time, around 10, 10:15 was the only time when market was threatening, then this move from the open could fail, because they didn't test the pre-market high, which was made here at 8. And they rolled down below that, and your target, if you want to bank that initial momentum move, should be below that. And here at this point in time, they're poking below the opening level, but not closing and not endangering this zone, because going back again toward the 10-point wide zone and toward the previous cash close again would not really be something that you want to see as a buyer. Testing that could lead lower and to that second scenario. Here, however, they were holding the open, and here again making higher lows. So basically here around 10:55, 11, that was game over for sellers, because they couldn't find the way back inside the former range. So then our longs would be this with the resting order here and here, buying dips, confirmation that we are going to get a bigger bite for patient traders or for traders who maybe had this trade and then later decided to go and enter again, which would be a good idea to use profits from this trade, because here you could also squeeze 2-hour trade at 35 point stop, 70 point target. That target would be below the pre-market high, and with that kind of profit you could then risk 1 hour again here with the stop now below this. Here we are having the move toward the main resistance, and this is now, since we are having the catch-up move for the S&P, we are having that kind of neutral bullish bias. If you want to fade main resistance, if you are flat, then fade is here at the very back end of it, to stay a bit in that trade, and then here when you observe that they can't really leave the zone, to just scratch it. And from here to here we had plenty of time, like an hour and a half of market doing nothing at the main resistance and threatening to move higher, and this is not for selling. Now this is a good price action only if you are holding longs from below and then you are pushing your stop slowly higher, locking more and more points and using these upper zones to scale out or to close. This small rectangle, I place it for myself to mimic the position of daily 50. The big picture is still the same. This is the DAX on a monthly chart, and I'm showing this chart for a full year now. Started to show this chart here when it was April last year. So now we are having like 15 years inside this channel. This is the previous month with a big rejection tail, and this doji is the current month. So that was our opportunity for today. It all came to buy the dip either here or later. Here there was absolutely nothing for sellers, and when we have that kind of time frame alignment, that bigger time frames and smaller time frames are pointing to the same thing, that is the time when you can land a bigger chunk in day trading. While here what we had here and here is ranges, and this was a range here also is only for zone to zone trading. So for today, to land a bigger chunk, it would be either to take 2 longs or to take a single one, but to be really patient to hold all the way to main resistance or even for a longer. Now we can see on the US markets, let's go up now to a 40-minute chart, what's happening there. S&P is basically chopping inside 20-25 point range between the unfilled gap which they filled today and the previous cash close. So both cash references acted here for day trading, here for short, here for long, and Nasdaq went down influenced by Netflix, which went down 45%. So tech sector is very important, and today in the after hours Tesla will report, and most likely it is going to heavily influence on Nasdaq. If we get something like plus or minus 7-10% or such, that's going to heavily influence on Nasdaq, like it did today when it went down for the 4th time from the same resistance zone and for like 200 points or so. Look at this. No, 300 points. So a really big move on Nasdaq, nothing on the S&P, so divergence there caused by earnings. And we had a good directional day on DAX at last. So that would be it about today. Today easier to predict and to have the neutral bullish bias, and we should see for tomorrow, because now price is stuck again below the daily 50. So with more information from the futures close and with more information from the pre-market session, we are going to have tomorrow another plan and another set of charts. Until then, I wish you a pleasant evening and good trading.